Good afternoon. I'm Taylor Combeluzier, a mining analyst here at Red Cloud Securities. I'd like to thank everybody who's joining us today for both our keynote and throughout our presentations at the Red Cloud Very Pre-PDAC Mining Showcase. We would like to extend our thanks to the TSX for sponsoring this keynote session. It's with great pleasure that I introduce everyone to Joe Mazumdar, editor and analyst and publisher at Exploration Insights. Exploration Insights is a subscriber-based business that offers investors an independent, unbiased, and technical analysis of junior mining and the exploration sector. This keynote will be comprised of two parts. In the first part, Joe will start with a presentation, and then in the second part, we'll open it up for Q&A from our audience. So viewers, please submit your questions using the Q&A link. And with that, let's dive right in. Joe, thank you very much for joining us today, and please take it away.
Thank you, Taylor, and I appreciate being here and invited to the first Red Cloud Very Pre-PDAC session. I'm just going to share my screen now. Okay, hopefully you can all see that. I'll just get the pointer out so that way I can highlight things. Okay, so this talk, I decided to talk about copper. I've been in the copper part of the sector for a long time. I used to look for porphyry coppers in the Andean region of South America back in the 90s. And then I also worked as a copper market analyst for Phelps Dodge. And so I've got a lot of linkage to the metal. And this session, I thought I would, with all the talk about other commodities, I thought I would press on with the copper argument. So without further ado, let's get going. Okay, so last year, so this is a graphic of the returns of 2021 versus a suite of commodities and ETFs that I follow weekly for my subscribers. So basically last year we saw a restart of the major global economies, which supported a 55% return in crude oil, natural gas, and this is all pre-Russian invasion. It was just a restart of the economy. Aluminum was going, zinc was going, and copper was up about 25%, similar to nickel. The best performing commodity last year was tin in terms of the ones I follow. And the base metals equity index, the XBM, was about up 27%. Precious metals didn't do as well due to the rising dollar. The Dixie was up 6.3% and in anticipation of higher interest rates. So overall, precious metals equities performed less well than base metal equities last year. So if we look at this year, we still have those trends, but now recently, some of these trends have been exacerbated by Russia's invasion of Ukraine. And so this is a graphic, USGS and some research showing the exposure of different commodities to Russian potential sanctions on Russia. And the biggest one's palladium. Nickel's important as well in terms of the commodities we follow. So you see on the right, you see the Norilsk nickel operation. That's the one that's the most important. And anybody that's watching the share price of Norilsk nickel, that's taken like basically a falling knife right now. And some of that's due to people in the US and other countries can't buy that stock. And so there's just no buyers for it. And that's why we see it in a bit of a free fall. But what I want to show you here is that, the ones that are taking advantage, or not taking advantage, but the price risk is more on nickel. And then you can see copper. It's not an important metal here with respect to what's happening in Russia. But that, I'm not suggesting forget about it, but that's why I'm suggesting that some people are forgetting about it. So if we look at, from about February in 2019, early 2019, we look at the visible stocks. And so these are the London Metal Exchange, the LME, the Shanghai Foreign Exchange stocks of copper cathode in warehouses. And so we can see that the price of copper here in about March 2020, when we had the COVID impact on North America, the stocks rose. They were at a peak of 610,000 tons of copper cathode in warehouses controlled by these two exchanges. But if we look further at its lowest point, which would have been probably around here at about 110,000 tons per in these warehouses, copper was at about $4.34. What's interesting is now we've had a bit of a spike in inventories here, from the 110 level to about 230,000 tons, but the copper price has stayed at about $4.50. And I think that's important in terms of the resiliency right now. So if we look at the same graphic that I showed you before, but now 2022 year-to-date returns, we see that copper is at about 92%, and these dots represent the proportion of 52-week high. Copper has not done that great. I mean, the ones that are performing well with respect to base metals, you see nickel over here hitting new 52-week highs almost every week, and that's mostly because of the Norilsk operation in Russia. And what we see here in the current market is that volatility, which wasn't a big deal in 2021, has become a big deal. The volatility index, the VIX on the CBOE, is up about 60% year to date. And once again, the commodities that have been sanctioned have been performing well. I mean, that Russia is exposed to, the crude oil, natural gas, palladium, and nickel. So if we look at really the reason not to forget about copper is this, is the forecast supply and demand for copper going forward to 2031. And so you can see here's copper in metric ton, millions of tons of copper. The red line is demand forecast, which people tend to grow at 2%, 3%, compound annual growth rate. And then underlying that, the area graphic is the blue is basically the supply from base case mines. And this supply always declines because mines are declining assets. And so that peak from base case mines peaks at about 2024. And then before that, we need these brownfield expansions. And so theoretically, this is telling us that about 2026, 2027 is when we start seeing the shortfall, where we need new projects that are not known right now. But what I would argue is that with what's happening geopolitically, I mean, not even including Russia, because copper is not impacted that greatly, is what we're seeing in Chile, what we're seeing in Peru, the heightened geopolitical risk, the inability to permit projects in the US might impact even these brownfield expansions, such that this gap that we see in 2026, 2027, the snapshot forecast might be earlier. Okay, and so here's a little bit of anecdotal information about the slowing up of ramp up of production. So Richard Atkerson, the CEO of Freeport-McMoRan, which previously acquired Phelps Dodge, who I used to work for, says basically, the clean energy transition is driving demand, but now it's getting harder to permit and advance projects because of local communities, politicians, and then the larger rents that countries are asking for. So right now, there's about several mining projects in Chile which require about $70 billion in capital investments that can be deferred, canceled, or nationalized. And we are expecting higher rents, higher royalties, potentially taxes. And now in Chile specifically, we're looking at water restrictions. Like I know from my time at Newmont as well, I mean, water was a big issue in Cajamarca where Yanacocha was producing. And that's one of the reasons that Congo was taken off reserves and they're not building it anymore. Antofagasta, again, another issue with water, Minnesota's boundary waters region. There's been a proposed 20-year ban on mining, and that's negatively impacted their Twin Metals copper and nickel project. First Quantum in Panama. After the project was built, they were forced to pay higher royalties, such that the country could receive rents earlier. And importantly, I mean, the country sees this project as being vital because it controls about 3.5% of gross domestic product in Panama. Another project, Resolution Copper, and for you to know, I mean, it was called Superior at one point, and when I used to work as a copper market analyst for Phelps Dodge, in the early 2000s, we had this project coming into production in 2010. It is now 2022. It's a joint venture between Rio Tinto and BHP. There's been about $2 billion spent on the project so far. These have been, major shafts to depth because this is a very deep underground project, bulk tonnage, block cave, that potentially, if it gets up and running at its maximum potential, it could, feed about 25% of US copper demand. But now this land swap that was improved by the previous administration was reversed, and now the the environmental impact statement has been rescinded for further review. So in terms of exploration, if we look at exploration, copper exploration here, this is copper exploration expenditures in US million here. So that's on the x-axis. And on the y-axis, and on the x-axis, we're looking from 2007 to 2021. So as you can see, it's also divided up geographically. So the dark blue is Latin America. And then the other thing to watch is Australia, Canada, and the US. Okay. So overall, over this period, Latin America has always been important. And it's seen about 40% of the global copper exploration expenditures. Understandably, because Chile and Peru are two big players in the copper market. Peru a couple of years ago was the leading importer into China. Contrast that with with Australia, Canada, and the US combined. On average, they were around 30 to 35%, and in 2021, they were actually up 30%. Canada, US, and Australia combined see about 30% of these from 2007 to 2021 on average. And as you can see here, total exploration expenditures for copper have gone up 30% versus 2020, but we're just getting back to 2019 levels. So what I want to highlight here is that Latin America is very important. The Canada, US, Australia is another component that we should watch. So now looking just at 2021, now we're looking at the 2021 exploration budgets in million for each country, okay? So like I said before, on average, over that longer term period, Canada, US, Australia combined averaged about 30% of total global exploration expenditures for copper. In 2021, they were about 35 to 40%, so 855 million of 2.3 billion went to Canada, Australia, and the US. And the biggest increase was actually Canada. It had a 150% increase in exploration expenditures. But note that the top 5 mines in Canada, we're talking Highland Valley, we're talking Glencore's operations, Vale's operations, Taseko's Gibraltar, Newcrest's Red Chris, they combine, are about 1.5% of global production. So we have a lot of money going into a country that doesn't seem to be that highly endowed like Peru and Chile. So, and then if we look at the numbers of companies, so these dots are the numbers of companies operating in each country, and these high numbers, over 160 to 180 companies operating in Australia and Canada, are a direct reflection of the amount of juniors working in these countries. Some of this in Canada specifically is driven by flow through. But then again, although Peru is a significant copper producer, much more significant than Canada, Peru saw about 24% less copper exploration expenditures than Canada did in 2021. So if we look at what's driving this, so this is a geopolitical risk profile that I got from the S&P Global Market Intelligence from the Control Risk Consulting Group. So they divide risk up into political, operational, like infrastructure, can you operate there, security, and then terrorism. So if we combine those, that's the total score there. We can see like this is ranked by the expenditures in 2021, copper exploration expenditures in these separate countries. So you can see that, you know, USA, Australia, Canada, you know, are the, you know, potentially lowest risk besides Sweden, but in terms of the money coming out. After that, the risk gets higher. I would argue now that Chile is probably a lot riskier because of the left-wing government they elected. And I would also argue that probably the US has gotten a lot riskier because of the new administration and the inability to permit. Again, here with Russia, I doubt if Russia is going to see much foreign exploration expenditures in 2022, but there might be room here for more exploration directed to places like the Congo, Botswana, and Zambia, which are also significantly endowed in copper. So if we look now at a company perspective, looking at how much they budgeted for copper, just copper exploration expenditure in 2021, you can see that Rio Tinto dwarfs everybody else. And the major companies driven by Rio Tinto's Anglos, BHP, Antofagasta Vale, Codelco, Freeport, you know, these companies account for about 60% of global exploration expenditures. You know, because copper projects tend to be large, they require significant budgets and they require a lot of time. So from discovery to production, you know, nowadays it can take easily over a decade. Rio Tinto itself, of that 60%, Rio Tinto accounted for a quarter of that money on global copper exploration. And interestingly, in terms of grassroots exploration, half of their budget, is directed to grassroots. About $190 million is directed to grassroots by Rio Tinto. That exceeds the next top five spenders in grassroots exploration combined. So they are super keen. And if we look at it from the junior and intermediate copper, companies that are looking at financing, how they get funded right now, we're looking at financings here. Like in 2021 versus 2020, we saw a significant spike in funding for juniors and intermediates. We had about $19.5 billion directed, but the biggest increases were like in specialty commodities like lithium. But importantly, what we've seen here, like for the base metal side, is that there was a significant spike from 2020 to 2019. But now this year in 2021 versus 2020, we saw another 33% increase in base metals, which is equivalent to gold. But now the exploration, the funding right now for gold versus base metals is almost equivalent, which is important. And we might be seeing more of that going forward. Okay, and then in terms of expenditures, this is for everything, gold, base metals, lithium, what have you, whatever anybody's spending on. You can see that, the majors spent 27% more on exploration expenditures in 2021 versus 2020. But the juniors, because of that financing, spent almost 60% more and controlled about 35 to 40% of the global exploration expenditures at the time. So if we look at, the end game, in terms of M&A, I did this graphic for my subscribers a couple of months ago, is that, I calculated about $4.8 billion worth of M&A transactions that basically acquired 33.1 billion pounds, million pounds, sorry, billion, of global copper resource, and average cost of about 15 cents per pound. Nickel was being purchased at about 25 cents per pound. But the largest transactions were for operating assets. So here is this is Mina Aguas Tenidas SA, which is in the Iberian Pyrite Belt, which was purchased by Sandfire, an intermediate base metal producer out of Australia. The Sierra Gorda portion that South 32 purchased, that was an operating asset. And these are interesting. Here's a couple of assets that were purchased by Sibanye Stillwater that they said that they were going to buy, and then they said that they're not going to buy. Right now, it's a bit problematic, and Appian Capital, the private equity company that sold it to them, basically want to take them to court. So right now, that has been the trend, more operating assets, okay? And the sellers here were private equity, like your Appian, and also with Matsa, there was a Abu Dhabi sovereign wealth fund involved in that sale, but also Japanese and Korean firms like the smelters. They were the sellers. So in terms of future base metal targets, what are people looking for? We could see, here are the high IRR, internal rate of return projects, and so you could see things like the Arctic project. You could see Tecoa, which is a nickel project, but Tamarack, Jaguar, these are all nickel projects. But you can see also, Jose Maria, which Lundin Mining put into their portfolio. You see Filo del Sol, which got $100 million from BHP up there. So these are the projects. There's not a lot of big ones, like Pebble is probably not going to happen. Galore Creek is a joint venture between Newmont and Teck. Taca Taca still needs more infrastructure in Northwest Argentina potentially to get going. But see, there's a lot of projects here, and each one of them has maybe a bit of an issue right now. So this is the recent news about BHP investing about $100 million into Filo Mining, and this is a project that's right close to the border between Argentina and Chile. I'm heading actually down to Argentina next week on another site visit. But yeah, this is they found a breccia zone within their Aurora zone, which is below a low-grade open pit shell, and fantastic results of over a kilometer of 1.26 percent copper equivalent from about 140 meters below surface. So BHP also made a major investment in SolGold in Ecuador on their deposit, and so they're making an entry here. BHP was in Taca Taca back when I worked there in the mid-90s, and they also had a chunk of Agua Rica. Since then, they pulled out. So this is the first entry into Argentina. And then what you do see is that even though Latin America, the same amount of funds are being directed there because of the endowment, there is a bit of shifting, less into Chile and Peru and more into places like Argentina and Ecuador. So another thematic, which may play a role, depending on the paucity of projects, is the ESG footprint. And that's what companies are pushing for. But if there's not a lot of projects, whether this is as important as it was before, that might be a debatable point. Okay, so now we'll look at some companies that I have in the portfolio that I look at for exposure to copper. And this is sort of like a depiction of the Lassonde curve here. I used to do this when I was with Canaccord, but in terms of risks, asset studies, financing, risk profile, geopolitical risk, and time concepts, exploration falls on this part of the curve. So let's, and this is grassroots exploration predominantly. So one company that I visited a couple of weeks ago is Pan Global Resources, which is listed in the Venture Exchange, market cap about 140 million. It's run by a fellow who was an ex-Rio Tinto manager in South America and also in Europe, and also was part of the project generation team out of Bristol. This is in the Iberian Pyrite Belt, which you can see is basically littered with mines. And when I drove there from Lisbon to Seville, beautiful city, you know, we hit a mine almost every hour. You know, we went all the way through here. Some major mines like Neves Corvo, Matsa, Rio Tinto, and Grupo Mexico is trying to restart the Aznacoya Los Frailes combination. And also, let's not forget about Las Cruces, which is undercover. That was a high strip open pit mine that, you know, I think they were taking up 7 to 8% of a chalcocite blanket at one point. Now they're going to go underground on the hypogene, but before that, they're going to take out the tailings and reprocess tailings at grade about 1%. Interesting. So the latest acquisition, which really puts the Iberian Pyrite Belt back on the forefront, is the Matsa acquisition by Sandfire Resources for about 1.86 billion. So why I like Pan Global is that geologically, the discoveries that have been made on the Iberian Pyrite Belt for copper have been related to gravity surveys. So coarse gravity surveys were responsible for Las Cruces deposits in Neves Corvo and other projects. It seems to work really well. And so they have done they have old gravity data. Now they've got more detailed gravity data, and they've come up with a bunch of anomalies. One of them is Romana, which you can see on the lower part here. And then you can see their gravity anomalies here, and you can see how far their property is from the Aznacoya open pit controlled by Grupo. And you can see the Neves Corvo mine here, the camp here with its gravity surveys, you know, in terms of 1-to-1 scale here. This is 2 kilometers, that's 2 kilometers. They're drilling now, and here's some pictures of core. This is chalcocite. It looks all shiny and brassy, but it is chalcocite. It's just a camera flashed. But it's massive chalcopyrite mineralization, and also they got a bit of a tin kicker in places, which is similar to Neves Corvo in terms of Neves Corvo is another one in the Iberian Pyrite Belt that has cassiterite. And then once you hit the footwall massive pyrite zone, which is basically what a lot of these pyrite belt bodies have, you're out of it. Okay, so that's one of them in terms of grassroots. Another one that's super grassroots that still hasn't drilled yet would be Hannan Metals. It's got a market cap of about 30 million. And what's interesting about this, besides porphyry coppers, which is a major source of copper, the other major source of copper is sediment hosted copper. And, you know, South America was never looked at much for sediment hosted copper, but you can see here that several companies are actually looking at sediment hosted copper in terms of exploration. You have Max Resources up in Colombia. I believe it's Aurelian down here in Ecuador. And then here is Hannan in the Huallaga Valley of northeastern Peru, and it's on the other side of the Andes, on the eastern side of the Andes, so jungle and that. So what happens is basically you have these basins that open up, sediments fall in, they fill up with water, they evaporate, you fill up with a salty brine. Eventually this gets buried, the brines heat up, they start to circulate in convective cells and basically leach the copper and take silver and chlorides, go up these feeder structures, which are the same faults that made the basin, and then eventually deposit in favorable horizons. And these horizons, you know, can be about 2 meters thick. But what's also interesting, here's Hannan with a market cap of about 25-30 million. And you could see that their land package is just about as big as Rio Tinto's, which obviously has, you know, a much higher market cap. And you can see that Rio Tinto, as I showed you before, spends about 193 million on copper exploration. Hannan has a joint venture with Jogmec, on some of its ground, and also has its own ground, and also is looking for porphyries as well on a different land package. But this gives you the impression what they're looking at. So this is a jungle area, obviously, and then, you know, within they pick up outcrops of 2.8 meters of 3% copper, and it's usually like chalcocite. And so I did a little bit of a graphic here in terms of all the trench sampling they did at that point, and I calculated about a 2.1% average copper grade on about 2-meter thick zones with about 29 grams per ton silver. So that's another grassroots play. Another one would be Rio Tinto's joint venture with this junior company called Midnight Sun Mining. So Midnight Sun Mining picked up this ground. So as you can see here, this geological map basically shows you that all the major deposits in the Central African copper belt here, this is Zambia here, there's DRC, there's Kamoa-Kakula up here. You've got Sentinel and Kansanshi, two major mines operated by First Quantum, Lumwana here, operated by Barrick. And then you've got these mines all over here, okay? And they're all around the edges of these domes. So Kansanshi lies on the edge of a dome. It's there on the right-hand side. You can see the Kansanshi mine. And Midnight Sun basically acquired all this ground to the south of Kansanshi. Okay, and then when Rio Tinto did a major aeromag survey around the Central African copper belt, you know, they picked up a whole bunch of ground. So all this ground around here is all Rio Tinto. And they noticed that they had a bit of a window here, which was Midnight Sun. So they did a joint venture with Midnight Sun. And copper exploration can take a while. And so they did their initial cash payment, $700,000, did their first initial work program faster than the company Midnight Sun thought they would. Another $3 million spent, another $300,000 in cash payment. And right now they're at stage one, where Rio Tinto is spending $16 million over 4 years to see if they can earn 51% in the project. And the prize here, and this is the Kansanshi Mining and Smelting Complex. So they do have a smelter here. So this has total reserves over, you know, 11 billion pounds, grading about 0.6. So these are the goal of Rio Tinto, is to find something like this. But given the proximity of Midnight Sun to this complex, if Rio Tinto doesn't find what they're looking for, a smaller deposit would still fit nicely for First Quantum. Okay, so now we're moving from the exploration to the development scenario over here in terms of a point of entry. So one I own, fortunately, unfortunately, had a big drop last week. So the Arctic Mining District, the Ambler Mining District in Western Alaska here, hosts about right now 8.7 billion pounds of copper. It has zinc, it's got gold, and it's got silver in these volcanogenic massive sulfide deposits. But the problem is it's remote. It's a 50-50 joint venture with South 32, a major diversified miner out of Australia, with Trilogy Metals, which is dual listed. But most of its liquidity, I would say, is in New York right now, and has been. And it's got partnership with NANA, a local native corp, which also is involved with tech at Red Dog, which is further to the west. So they already know the benefits of mining and that. And so there's a 211-mile access road to open this district up that has a right of way, and it goes through these national parks because the national parks were put in after. The problem right now, and that 30% drop in share price last week on high volume, was because here, when they were issued a positive record of decision in July 2020, there's a group, and we're talking hundreds of people in these small towns. This is about 20 miles. So this one's about 20 miles from the road, and this one's about 70 miles from the road. These guys who are getting very little economic benefit from the project are suddenly concerned about subsistence hunting, basically, especially these guys, because that road is very close to the Dalton Highway, and they're worried about public access. And so they're holding back. The BLM, I guess, doesn't want to get sued, and so they basically held suspended that permit. The stock price suffered, obviously, but the difference between this and Pebble and Northern Dynasty is there's strong support here by the local government, state senators, and Native Corp. So almost everyone that needs to support this project is for it. It's this infrastructural piece here, which is very important, the road, which is being basically become problematic because of these villagers. What NANA, the government, the state government, and the state senators are doing right now is putting pressure on Washington to give us a timeline to make sure that the only issue being opened up after a 5-year permitting process to actually get this road permitted in the first place in 2020 is the diligence is just here. We're just opening up that and not everything else. So I'm hoping that something comes out of this within the next few months. I continue to hold Trilogy. Another one that I recently purchased, and the reason for that was, it reached about a 52-week high in May. This is Arrow Copper. It's, when I showed you that expiration by company, Arrow Copper is one of the highest, junior copper companies that does expiration. And so they have this big district here that's fully permitted with a plant down here that they're feeding from various mines. And they're doing deeper drilling at their Pilar mine, and they're hitting 70 meters of 9% copper. And so all this work has basically told them that they might have to increase the size of their shaft and change the scope of their 5-year plan, basically to double copper production from 45,000 tons in 2022 to 90,000 tons by 2026. So there's not a lot of copper companies out there, but there's even fewer that are offering you growth. So it's these capital numbers that have increased that dropped the share price to a point that I thought this was a good buy, and I took part. Since then, they have done a bond that basically allows them to fund this entire capital required, without even considering their free cash flow that they're generating from their own mines. But at $4.50 copper, the company is confident that they wouldn't even need to tap that, and they can internally generate the funding for their capital requirements. Okay, so just to sum up, I'd say that although copper price appears to have stalled, and you can see that with the jump up in inventories, it's still sitting at a decent price. Nickel's taken the forefront because of Russian sanctions, but again, I emphasize, don't forget about copper. The reason is there's a paucity of development projects to fill this medium to long-term supply shortfall. And this supply shortfall could come closer because these major projects might not get permitted. And then also brownfield expansions might be more problematic with higher rents, higher taxes, as well as water restrictions in places like Chile and Peru. Copper exploration globally is up 30% 2021. The majority of funding continues to be directed to Latin America, but again, a change potentially from Chile and Peru. Especially for junior explorers, it's hard to raise money to explore in these countries right now, given the changing government. It's easier right now to get money for Ecuador and Argentina. The USA, Canada, Australia see about 30% of global copper exploration expenditures, but that increased in 2021. The whole geopolitical risk profile globally, including the US, is changing and it's getting higher. Okay, and so that's why there's a lot of money being spent in Canada for copper exploration, but problematically, the endowment just doesn't seem to be there versus some of these other countries. So, and then lastly, M&A focused on operating assets, but now with the BHP move on Filo, we might see people moving further upstream. All right. Okay, well, that's it for my presentation. Hopefully that was helpful, and thanks for having me.
Great, thank you for that presentation, Joe. So now we'll turn to the Q&A session, and just a reminder to all the viewers to please submit your questions using the Q&A button. So maybe before we turn to the questions, just tell us briefly about a little bit about Exploration Insights.
Yeah, I always get accused of not promoting the letter, so thank you for the opportunity. So Exploration Insights is a weekly newsletter, and I talk about the mining sector. Even though there's a focus on junior mining, I have no problems sometimes investing in more larger companies. So I had Ivanhoe at one point. We owned Pan American for silver exposure and a potential restart in Escobal. Aero Copper is a much bigger company, but that's got great growth potential. And so if there's an exploration component to a company, even if it's in a bigger company, I will look at that. Commodity wise, right now, my focus is on precious metals and copper and nickel. I'm looking at lithium, but lithium I always tend to buy when it's high and sell when it's low, so I'm never sure about that market. But the problem is things like potash as well are doing well, but problematically it's hard for me to understand at that kind of level all these markets, and so even though I might buy it personally, it's harder for me to put that in the letter. So again, weekly publishing letter, subscribers only. And that's how I make my money and from the returns on my investments.
Perfect, great. Okay, so we'll jump in with the questions here. The first one we had in was, there seems to be so many massive brownfield copper project and advanced projects that are waiting for financing and a construction decision. Do you see a place for greenfield copper projects, or is the time horizon just too far out for investor interest?
Well, as you can see, with the big companies, especially like the Rio Tintos that look at a longer time scale, plus 10 years, grassroots is important because they need to replace, not this CEO, but 2 CEOs beyond. What's the next copper deposit? Because in terms of incremental impact for these major copper producers is they need to find something big. Otherwise, it's just not going to move the needle. If it's brownfield expansion can only get you so far, and you can see that in the declining production profile, you'll need grassroots. But a lot of in the gold sector especially, there has been less grassroots exploration, and that's opened the window for juniors to come in. That's less so in the copper market, but now it is becoming more of an issue because most of the producers prefer to do let's say the low risk brownfield expansion to keep the ball rolling, basically, rather than spend money on grassroots. Eventually, if we're looking at $4.50 copper, some of these projects might get into development, but people are looking not only at grade and economic viability, but also looking at permittability. Can you actually permit it? And then you've got to layer on ESG because these copper projects are 20 to 30 years. So there's a lot more to think about than just internal rate of return and NPV nowadays.
Right, and with that, I don't know if there's any easy way to sum this up, but kind of with what you outlined there, are there any types of copper projects that investors should be paying attention to in particular, like any key characteristics that you think kind of rise to the surface and, kind of easy rules of thumb, or is it just too complex?
There's no easy rules of thumb, but you're all like when we invest in a junior or something, we want it to be acquired. So who's it going to be acquired by, and what are the aspects of the asset that would be that would make sense for somebody? Much of the copper exploration by juniors right now tend to be in volcanogenic massive sulfides, which are low tonnage, high grade, which sparks the retail. Oh, look at that, great, wow. Whether a major would want that, I doubt it, but the intermediates might be interested because, basically the Iberian Pyrite Belt, that's all that is, but the combination of it is infrastructure. You got roads going to every mine, permittability. These projects in southern part of Spain aren't getting permitted, but the issue globally as well is water. And so you need to get those water rights, quickly. I can tell you, I mean, like from the gold sector, like Anglo Gold's purchase of Corvus, one of the big reasons for that was also water rights that Corvus held. So, and then water is becoming an issue in Chile. It always was an issue, but now they want to, basically limit the water rights that these companies already have. And so there's a lot of different things to think about nowadays. And I would guess that the way to look at is to see how companies that are the producers, how they're reacting, where are they going, where are they spending their money, who are they acquiring. That's usually what I follow. I don't tend to follow, this statistic on what's high risk, what's low risk, but if this company is willing to go into that district, then I'm okay with it.
Right, okay. And kind of in line with that, just turning to the valuation aspect, we have a question here, just wondering about the in situ copper price or M&A prices, if there's kind of a range or differential between VMS or porphyry and kind of development stage.
I would say the biggest delta is operating versus development. That's the biggest problem, because if it's not permitted, maybe you don't have access to water yet, all that, you'll pay a significantly less percent per pound than an operating asset. And just like in the gold sector, most of the major acquisitions we've seen have been for operating assets, because it's a bolt-on. The permitting is already done. There's no more upfront capital required, and you're just into operations. And you can take that from South 32's perspective. They do have the trilogy of Arctic thing, but that could take another 5 years to come into production. And when they were spun out of BHP, they had no copper assets. And so they needed something quicker, and they bought Sierra Gorda. Sandfire, they're looking for more copper exposure. And here's a seller in a private equity group out of Abu Dhabi in Spain. So I would say the other component of this is technology with copper. With respect to getting better recoveries, leaching low-grade stockpiles that already exist that are just sitting out there, looking at avoiding the smelters and going to leaching copper from concentrate, which is something we tried to do with Phelps Dodge, but I think people have elevated that technology. So all of that is something else to look at going forward.
Right, okay. And then a question here, just wondering, you talked quite a bit about kind of the different jurisdictions and some of the geopolitical headwinds out there, in particular for Chile and Peru. Are there any jurisdictions that investors should be paying particular attention to, or ones that are under the radar that are out there?
Yeah, I would emphasize take Argentina's coming back. But again, it's not because Argentina's done anything. And, I worked in Argentina for 8 years. My wife's Argentine. So, it's almost as if Chile and Peru, when you say who's going to volunteer, took a step back, and basically Ecuador and Argentina just stayed where they were. And so now we're seeing much more interest in Argentina, especially in the San Juan area, which is someplace you can work. The problem is that if you get too close to the border, does Chile start, wondering about where the water is going to come from? That's the issue in the Andes. But also Argentina I've seen a lot of M&A for lithium in the Northwest. So province to province is different, just like everywhere, state to state, like in the US. And San Juan's a good province for copper, definitely. But I don't think anybody's going to try and go back to Catamarca, where Bajo de Lumbrera is.
Okay, and one that I've been looking at quite a bit is Colombia. I know they've made copper a strategic focus for their economy going forward. They want to be the third largest producer in the world, be at the forefront of the energy transition. Do you have a view on Colombia?
Yeah, Colombia has always been problematic in terms of water. In terms of where are you going to get the water from? And I noticed there was a lot of drilling programs that I went to where they actually had to truck the water, even though there was a river right there, because the locals didn't want them actually touching the river. So I was wondering, well, how do you actually build a big processing plant if you can't use that water? Colombia has, issues just like Ecuador and some others with indigenous rights and that, and also the Paramo. It's an asset by asset, location by location with respect to Colombia, because there is a definitely significant NGO non-mining component to Colombia, and I haven't been able to work out, whether that's provincially, or I don't know it as well as like Argentina, let's say, or Ecuador. I'm not, because these copper projects are huge. They're very big, and that's a lot of waste up front. But I've noticed, like, to the northern Colombia seems to be, you could work, but in other parts of Colombia, it's more difficult.
Right.
So
Okay.
I still got Colombia there, but I'm I guess more focused on Argentina right now.
Right.
In terms of South America, but I would add that consider Africa, because I think that's a place that's getting reinvigorated as well.
Right. Okay. We do have a question here on Arrow. Will Brazil, after the next election, be looking at changes to the royalty stream or taxes in the next few years? What's your view?
That could be, because the tendency is for a new government to come in and to comp yourself versus everybody else, to see if they're paying the right amount in that. But a lot of these projects bring a lot of economic development locally. And when you're in a remote location, the going rate in Brazil is about 15%, because you're creating all this infrastructure. And if they change that for Arrow, they would have to change that for Vale, which is a much bigger lobby group. So yes, there's a risk. There's always a risk. But I mean, if we're talking $4.50 copper, they'll still be making a lot of cash flow, and again, they're permitted to do so, and funded, I would add.
Okay. We have another question here, wondering just about trading multiples, whether it's EV per ounce or EV to EBITDA or PNAV. How have these multiples kind of evolved over time, and what have you observed?
Well, I mean, we don't deal with a lot of cash flowing companies at Exploration Insights, so the EV/EBITDA multiple on producers, I look at it more so from just balance sheet wise. How are they funded to grow, and where's the growth, and are they getting valued for the growth? And Arrow Copper right now is in a good spot, and that's why I like it, because it's just not a lot of companies offering that kind of doubling of growth with the kind of insider management ownership and reputation. With David Strang as CEO, it was obviously heavily involved with Taka Taka as well. So there's a lot of components to look at, not just, okay, but it's expensive. The problem is when something's expensive, it's because people are valuing the management team, valuing the asset, valuing the fact it's permitted, valuing the fact that they have access to capital. And if you want to buy something a lot cheaper and it doesn't have those components, it's going to stay cheap for a long time.
Right. Okay. We have a question here, just wondering if you've seen any new technologies or methods impact the success of exploration companies. In particular, I know you talked a little bit about gravity in the Iberian Pyrite Belt. Maybe if there's anything else out there that seems to be working well.
Well, it depends. Each type of deposit is different, and the environment that you're in dictates what geophysical methods work. And I just talked to Teo Dechev, who's the CEO of Mandora Capital, another company that's in our portfolio, a prospect generator, royalty generator in Serbia, Bulgaria, and now in Arizona. So what she was saying is that now they're working on a process with Vale, which is a joint venture partner, about looking at how each method works based on the different lithologies and based on the depth to target and which geophysical method, and we're just talking like one area to another area, works the best. And so it's a combination that does CSAMT work, does resistivity work, whatever, and then trying to figure out what's the best. And then once you've got it, then use that in that area. And that's where I would say that Pan Global have it, because there's so many case studies and recent ones where gravity has worked great. And so they're doing detailed gravity. Where soils work great, where you have outcrop, use soils. And they're also flying an aero electromagnetic survey, because really you're not looking for the gravity anomaly, you're looking for the sulfides associated with the gravity anomaly. And so that's another one to prioritize targets. So I would say each deposit, depending on the location, depth to target, has a different method that works. You just want to be investing in the management team that knows this and can, adapt and have the experience to do that. That's really what you want.
Right. Okay. Really quickly here, we need to wrap this up in a minute, but just a very brief thought, if you have one, on the copper gold projects in the Nordic countries such as Finland and Sweden with regards to the permitting environment and the risk reward aspects.
Yeah, I mean, each country is different. I mean, I've been to Finland and Sweden, and they're definitely more, in terms of permitting, harder, especially for gold, with the non-use of cyanide and that. But there's big operations in Sweden, iron ore and base metals, Boliden's obviously a big company up there. But I would say that the size of the deposits are probably not a big porphyry, not a big sediment host income, but still viable, because Europe still needs copper production. And I would say that, especially given the issues with Russia right now, that they might be even more incentivized to develop their own resources locally.
Right. Perfect. So with that, I think we are going to have to wrap it up. And, thank you very much, Joe, for joining us this afternoon. For our keynote session here at our very pre-PDAC mining showcase. Our next sessions, which start at 1 p.m. Eastern, are BlackRock Silver on stream 1 and Endurance Gold on stream 2.